Welcome to the fifth and final installment of the 5-part video series on financial compliance. These short videos focus on you, the licensee, and are designed to help you run your business. In this video, we'll cover who needs to have a project trust account and provide an overview of the requirements. The project trust account framework is designed to strengthen the security of payments to subcontractors in the building industry of Queensland. A project trust account is required for state government building contracts over $1 million and for residential contracts over $10 million. A separate project trust account is required for each eligible contract. There are two types of trust accounts: project trust accounts and retention trust accounts. A project trust account is a specific account separate to your normal business bank accounts. Monies are paid into the account by the project owner or developer, and the account is managed by the head contractor. The project trust account is intended to safeguard payments to subcontractors by requiring all monies relevant to the project to be paid into and out of this specific account. A retention amount is withheld from payment in case the need arises for defects. The funds are usually released upon practical completion or after the end of a defects liability period. The retention trust account is used to hold eligible cash retention amounts until they're due to be paid. The same retention trust account can be used across multiple projects. The retention trust account is separate to the normal business bank account and keeps the retention funds separate from project funds and other cash flow. If a project requires a project trust account, the person who will manage the trust funds, called the trustee, needs to open the trust account with an approved financial institution. The account must be in the trustee's name and include the word trust. Project trust accounts must be opened by the head contractor within 20 business days after entering into the contract, and progress payments from the principal must be paid into the project trust account. There are rules for opening, using, and closing trust accounts, including when and where a trust account must be opened, how and when deposits and withdrawals can be made, giving notices, record keeping, and accounting requirements. Only the trustee can withdraw amounts from the project trust account, and only for specific purposes, including to pay subcontractors and pay themselves if sufficient funds remain. Accounts can only be closed once the project is finished, and no amounts remain outstanding to any subcontractor. Trust account ledgers must be kept, including records of deposits and withdrawals, trial balance statements, and monthly bank reconciliation. There are some exemptions from requiring a project trust account, which include contracts for solely maintenance work, subcontracts, and short-term contracts for work that is to be completed in less than 90 days. There's a handy tool available on QBCC's website to work out whether the project you have requires either a project trust account or a retention trust account. This is the last video for this series on financial compliance.